that's lovely. Good evening, everyone. It is 8:59, just about 9 o'clock hour here on Thursday, March 30th. Oh my goodness, it just seems like just recently we were looking at, January 1st, January 2nd, and all of a sudden we're into the end of March, which officially ends the first quarter. The second quarter starts next week, next Monday, as a matter of fact. So next Monday, the first week of the second quarter is going to start. So we're going to tie everything up tomorrow afternoon at 3:30. We're going to come in and re-go over some of the trades that we made during the week, because tomorrow is Friday and the options do expire. Here at Dividend Stock Talk, we talk about investing in dividend stocks, specifically to gain monthly cash flow. Because I like to get monthly checks. I like to have my money working constantly, and I do have bills I like to have to pay every month, every week. So that's why I'm looking to get money returned on my investments on a weekly basis. All right, that being said, let's take a look at some of the positions that we have on this week. We're going to look at the two separate accounts that we've been following since the beginning of the year: dividend investing and dividend investing with the options. So let's quickly take a look and see what we're doing. Well, I'll make this a short show today because we're not really going over very much other than where we are in the positions that we're in. Excuse me, I still got that cough. Isn't that amazing? Okay, this is our first one. We're looking at dividend capturing. Excuse me, dividend capturing. Actually, we're not really looking at dividends in this one. We're looking at dividends on steroids, which is a move up coming into the dividend date. All right, let me see if I can simplify it. We like to look at stocks 10 days prior to the EX date. The EX date being the last day the stock trades before the dividend is paid out. What does that mean? Well, to a lot of investors, that means they want to get in before the dividend. That way they can qualify to capture the dividend and maybe get out a little bit later on for a profit. That is dividend capturing. Now, the reason why we look 10 days ahead of time is we want to get in there before the other investors do. We want to get the run-up, or we want to get more money than the dividend itself. We want to get, the number I like is 2.5%. All the years I've been doing this, I find the 2.5 be the easiest. Each stock has its own number, and we have some calculations to figure that out. But like I told you before, I'm a lazy trader. I just want to put, set it, forget it, click the numbers, how many stocks I want, and then be done with it. So we're looking at 2.5% to get in and get out. Apparently, as you can see, we got in and out of DG today, 1,200 shares. Our target was 73.95, which we hit that one. The other three positions that we haven't gotten out of yet: MA, which is MasterCard; M, which is Macy's; STX is, I really don't know. Really don't care, but let's see what they're doing. Okay, let's take a look at STX first. As you can see, we got into this quite a while ago. Let's bring STX up here on the chart. STX. All right, STX started the year off at 33.92, which is right around 34. Went sideways for about a month, dropped to make it low of the year, way down in May, second week in May, 1864. From 1864, she ran all the way up all year round until she hit a high of 49.57, which was the beginning of this month. Now she's going sideways with a little bit of a downtrend to hit where we are today, 47.12. STX, we have a target of 48.60. And why do we have that? Well, let's find out why. We're going to view our trades. Okay, as you can see here, we have two sets of trades. We bought 800 shares at 48.59. Okay, so someone asked me a while ago, how do I get out of a losing trade? Well, here we go. STX didn't hit the target that we were looking for. We were looking for a target 2.5% over and above the 48.59 that we bought it for. We didn't make it. So what do we end up doing? We end up holding it for a certain period of time, and it just so happens that 800 shares of STX was enabling us to get 11 shares for the dividend. So rather than getting the dividend as a check, we took the dividend as in more stock. So we got 11 shares of stock. Didn't cost us anything, so now our average price is down to $47.93. Now we could get out at $47.93 and have it just be a wash, but I don't want to do that. I want to sell it at exactly what I paid for, which is $48.59, and I want to put it up $48.60, I believe. Yep, for that 1 penny. That way it gives me a commission cost. So that way I'm still collecting the dividend, because I collected the dividend for this stock as 11 shares. I don't really know how much that is off the top of my head. To be honest, I don't really care. Just knowing that I'm making money and things are progressing forward, that's good enough for me. However, with STX, although we made $1,200 today with the movement of the stock, we are still down $633 on STX. So we're going to hold it for a little bit longer until we hit that 48.60. But let's quickly take a look. At the seasonality for STX and see what we can expect. Okay, down here to the seasonality. Now this is what we're looking at STX at this moment in time. Blue represents the price where it is now, and red represents what it normally does over a 10-year period. And what they usually do is they take a one-year stock chart, and they put it on top of one another, for 10 years to find out what is the average movement that this stock makes over that 10-year period. And this is what they came up with. Now, don't get me wrong, it looks kind of messy, but let's isolate just a small period right like that. Okay, here we are right now at 47.13. Okay, 47.12. We get the crosshairs between where it is now and seasonality right here. As you can see, where they intersect right there, 330, we can look for the next couple of weeks for this thing to go up just a little bit more. Now we just need to go up just a tiny bit more so we can get out at the 48.60. Hopefully we can make it. You never know. But we're going to hold on to this for a little bit longer and see how that works for us. Okay, so STX wasn't that bad. We'll hold on to it for a little longer and see if she gets back to getting us into profitable. Okay, MA, which is MasterCard, which we just got into this one just the other day. Let's bring up MasterCard's chart. Okay, now MasterCard started out the year at 93. She goes sideways for about three months and makes the low of the year way down here in July, around July 5th, at 86. From 86 in July, she jumps all the way up to where it is now at 112. And she's been trading in the 112 area for the last month. Wow, you got like 7 up days in a row. I like that. Now we're shooting for a target of 114.39. Okay, right now she's at 112. Okay, MasterCard is up 244 for the day and at 428 since we got in. So if we wanted to, we could get out of this position tomorrow for a $400 profit. But like I say, I'm a lazy trader. I'm just showing you how to do this. I'm going to let the software do it, work on its own. I'm just going to set it, forget it. When it hits the 114.39, cha-ching, it'll get sent to my email, which will then be sent to my phone, and it just lets me know, hey, you sold MasterCard. Whenever it hits, I'm in no hurry, don't really care. If I have to hold on to MasterCard, why not? I don't really like the yield they offer. However, they do offer quite a bit of notoriety, so to speak. It's a household name. Everybody knows them. All right, so where are we at MasterCard? What was it? We got in at 322, which was 8 days ago. So they got a dividend coming up within the next couple of days. All right, we got in at 1160. See that? 111.60, and we're looking for 114.39. That's my 2.5%. Now, like I said, we could get out now, take the 428 profit, and just smile away to the bank, or just let the software do its thing. So I'm going to choose on letting the software do its thing because that's what we do here. We show you how to use it, and it wouldn't be fair for me to give you numbers and show how we're working if I keep changing the rules as I go. So I'm not going to change the rules. I'm going to let it play out, and I'm going to let it see what happens over the next week or so. Maybe we'll hit the target, maybe we won't. We don't hit the target, we collect the dividends, on 400 shares, and then we sell it for what we paid for it. All right, so that's MasterCard, lovely. DG we don't have to look at because we bought that and we sold that. We can look at it, so we'll give it a minute. We'll take a look at that one right now. I'm going to take a look at Macy's. Okay, Macy's, we have 1,621 shares. Where did we come up with that number? Well, I'll tell you. First, before I do that, let's do a quick breakdown on what Macy's did for the year. Macy's starts out the year at 44. She's all over the place. She goes from 44, drops down 2 months later, down to 30. A couple months later, she's up to 40. She drops back down to 34, jumps back up to 45 to hit the high of the year, comes back down, drops down to 29 back in the end of January, shoots up at the beginning of March to 33, and now she's dropped down to where she's trading right about now, which is 29.46. So she had 5 up days in a row, which is a good thing. And what are we looking for? Now, we got into Macy's back February 21st. That's over a month ago. We've been holding on to this for a month. Okay. We had 1,600 shares, which means we collected 21 shares as our dividend. Okay, which brings our average price back down to $32.66. But I don't want to sell at $32.66 because I want to collect that money. So we want to sell it at $33.10, which is 1 cent over and above what we paid for it. Okay, it's still a profit. It's not a great profit, but it will cover our commissions, and it will allow us to get the 21 shares as our dividend. So we get that sell order in for $16.21. See, when you have strange numbers like this is where the dividends come in. We actually, instead of taking cash for the dividends, we actually took stock and trade. So let's take a look at Macy's seasonality and see what we can think this thing's going to do over the next couple of months, or next couple of weeks for that matter. And this is not looking good. Okay, here's where we are now. As you can see where we are now at 3:30, we have one small bump coming up in the next couple of days. Other than that, she's going sideways for the year. It looks like we'll end up holding it because I really don't want to sell for a loss because that's not what I'm trying to teach. You know, Macy's was up 300 for the day, but we're still down 5,189 since we bought it in February. Okay, so you guys want to know, does it work all the time? No, it doesn't work all the time. Look at where we are. We're down 5,000 just on Macy's. But we're not going to sell it because Macy's has been around for over 100 years. It's a household name. They pay out good dividends. And worst case scenario, we'll collect another 1,600 dividends or 21 more shares, or maybe 22 shares the next time it comes around. February, next time Macy's will come around would be, let's find out. Well, simple enough. February, probably, that'd be June or May, wouldn't it? Let's put M. We're going to add that to our calendar. Go. Now this just tells me when it trades throughout the year. Okay, so Macy's does its dividends March, June, September, and December. Okay, so we're at the end of March now. Next week's the beginning of April, May, and then June. And then we're what? The second week of June? Third week of June before they pay out the dividend again. So hopefully they'll hit its target before the second week of June. Okay, so that's Macy's. And the last one, we'll take a look at DG. I believe that's Dollar General, isn't it? Dollar General, yeah. Now DG is not that bad. She starts out the year at 85.72, goes sideways for a couple of months, jumps up to the 94, goes sideways for a couple more months, and then right here in August of last year, she drops from 91 down to 76, and then continues down for the next few months to hit the low of the year of 67. Sideways for a month into another trading range of 75, which brings us to where we are now, a little bit of a downtrend, but a good enough of a trend to get us our target that we were looking for. Now, I can't really look back at the trades because we're out of it. So anyway, we made 3,900 on DG today. Well, not today, but when we bought it, however long ago we bought it, that's where we are. We're on a $3,900 profit, which is good. Okay, so overall, on this account here, it's up 17,000 since the beginning of the year. Now, that's the first quarter. It'd be nice to do 17,000 each quarter. Okay, so 17, 17, 17, that's 460. Ooh, 60% for the year? That would be lovely. Anyway, I'm not counting on that, not saying that you're going to do the same thing. That's what we're striving for this year. And with Donald Trump coming into office, everything's a little bit askew. It is. The first 100 days of the president's new presidency, the stock market is going crazy. Is that what everyone's going to see? No. Did everybody see that? Probably not. Are you going to get this next year after he's been in office for a year? I can't really say. But anyway, let's jump back and look at the other accounts. We looked at all four of these. Now that's just the dividends on steroids. That's where we get in 10 days before the EX date. Okay. Now we have several options when we're doing this way. The number one option is to get the biggest chunk. The biggest chunk is the 2.5% from the dividends on steroids. So when you look at the stock chart that I send you every Monday, if you're a subscriber, if you're not a subscriber, subscribe. What's it going to get? It's $29 a month. You're going to get all this information, and look what it's doing on these accounts. Okay, you get the list emailed to you every Monday. You take a look, and you invest in the stocks, and they're good stocks. You got Dollar General, Macy's, MasterCard, STX. Who's STX? Let's find out who they are. More info on STX, fundamentals, company news. Who is STX? Seagate Technology. Wow. Never heard of them. Sorry. Anyway, Seagate Technology is the one we haven't heard of, but that's okay. All right, so you got the four stocks that the software says it's going to do what it's going to do, and apparently there's a good reason. I'm pretty sure I told you when we buy them. I have a tendency to forget, put it out of sight, out of mind. I already made the trade, so why justify why I made the trade? I'm already here. So now what do we do? So STX, we're looking for 811 shares. And we're looking for a target of 48.60. Right now she's at 47.15. Worst case scenario, I hold on to it until it pays out another dividend. All right, let's jump over to the next account and quickly take a look at what the options are doing for us. Okay. As you can plainly see, we only have one working trade. That's because yours truly messed up a few weeks ago, February 21st to be exact. I was looking at TJX and I sold too many shares. So I ended up going short 100 shares. Now I'm waiting for the stock to go down to hit the 75 target so I can break even on it. All right, because I don't like to lose the money on it. But other than that, all the other positions here are all option positions. Okay, so let's take a look. ABBV, ABT, ACN, AET, AMT, AXP. That's a lot of A's. EOG, TOL, VZ, and YUM. All right, so let's take a look at one at a time and see where we are and what we're looking at. Looks like the only one that's going to be questionable is ABBV. All the other ones, see the ITM, that means in the money. That means it's profitable to make money on those. So ABBV, let's take a look at that ABBV. All right, ABBV starts the year out at 57.21. This is kind of a messy looking chart. There doesn't seem to be any rhyme or reason other than it looks like it's going sideways. So you got 57 down here and you got 64 up there. It's not a big trading range, but it could be considered as a channel. All right, so if you get here in when it's low, 57, you get out when it's 63, you get back in at 59, you get out when it's 63, you get back in when it's 59, you get out when it's 63, get back in when it's 59, get back out when it's 63, get back in when it's 59, get out when it's 60. See what I'm saying? 63, get back in when it's 59, and get back out when it's 63. See how many times that was? That's just crazy. That was just right off the top of my head. I could have, gone into a little deeper and did a little more trades, but it's kind of like a channeling stuff, kind of going sideways. Messy, don't really like it. But let's see what she's doing. Okay, so for the last month, she's been going sideways in the $65 area. What do we have for ABBV for us today? All right, we got the 65.5, 66. Wow. So we basically lost the whole $440 on this one. Unless she's going to recover tomorrow and end up above 66. Okay, because we had the 65.5 calls, and she's at 65.46 now, and we sold the 66s. So what we could do is we could get out tomorrow. Now I'm going to be checking in tomorrow on 3:30. Okay, so to give us kind of an idea, what are we going to do? What are we going to do? You know, the last 15, 20 minutes of the game. All right, right now, ABBV, we need it to close above 66 for us to make our profit on that one. If not, we're out $440. All right. ABT. Abbott Labs. Hey, we've heard of Abbott Labs. Okay, Abbott Labs starts out the year at 41. It looks like she's in a trading range too, between 44 and 38. You know, up, down, up, down, up, down, up, down. Okay, she starts out the year at 41. Shoots up to hit 44, drops down to the low of the year area around 36, hits the high of the year at 45, comes back down toward the end of the year to close the year out right around 37 area. From the beginning of the year, it's nothing but up into the trading range where she is now around 44, which, as you can see, from the high of 45.80 here, she's in a slow downturn all the way. But where are we for ABT? All right, the 44, 45, 44. All right, right here, see it? The 44, 44.50. So as long as it stays above 44.50, then we make our money on this one. Okay? And she's got to stay where she is. All right. Still looking at the three pluses or the three wise men. And go up, we make money. It stays the same, we make money, and she can still go down a little bit. It can still make money as long as she stays above 44.50 by the end of the day tomorrow. And we will find out at 3:30 tomorrow afternoon when we do our final recap for the week. So that looks good. ACN, another one, sloppy, all over the place. Okay, ACN starts out the year at 116, goes sideways for a couple of months, goes up to a little trading range of 118 for about a month, drops down to another trading range of 112 for 3 months, goes up to a trading range of 117 for a while, dips to 113, then shoots up to the high of the year, 126, and drops back down to where she is today at 120.50. ACN. Oh, this one looks good. 118, 119. So as long as she stays above 119, we're good to go. Basically, don't even need to look at this one. This one's great. All right. Anyway, as long as she stays above 119, so we get the three kings. Stay the same, go up, or even go down a little bit, and we make money on this one. All right, that's good. AET. There we go. AET goes sideways for quite a while in the 112 area. See that? About 2 months. Jumps up 120 for about 3 months. And then she drops to the low of the year right at the beginning of November. And like a lot of stocks, right around election time, she jumped from 105 to 135. That's a $30 move. That's 30% in 2 weeks. That's crazy. Anyway, 30% in 2 weeks. That's great. So there's the pullback down to 116. Okay, jumps back up to the trading range of where she is today at 126.91. So we get the 125, 127. Okay, although we're in the money, we still want this thing to close above 127. Okay, so we're in the money, so we're making money on this one, but we would prefer it to close above 127. She's at 126.91 right now. So we're making money, but we want it to go up a little bit. Okay, so let's get out of AET and find out what AMT is doing. AMT starts out the year at 102, goes sideways for a couple of months, shoots up trading range of 116, 114 for about 3 months, and then drops from 114 to a trading range of 104 for about 3 months. Then right at the beginning of February, it's like almost shoots up like a rocket from 103 to 120. That, my friend, is a nice movement over the last 30 days. All right, she's at 120.91 at the moment. And where are we? We're looking at 118, 119. So that's another one. Hopefully we don't have to look at again. But AMT is looking great. Okay, AXP. Another lovely looking chart. Starts out the year at 60. Jumps up to about 63 for a trading range for about 6 months. Right into the end of October. From there, she shoots up very slowly, slow incline, all the way to a trading range of 79, where she is now. Now, AXP, we're looking at the 78.50. Now, this is way in the money. We're at 79.21. So, again, this is one that we hopefully don't really need to look at tomorrow, but we'll look at it anyway, right around 3:30, just to give us, that false sense of security, to make sure everything's okay, because with the stock market, you never know. Everything's great until it's not. Everything sucks until it isn't. Anyway, however you want to look at it. Okay, EOG starts off the year at 73.63, finds its low about a week later at 69, and from there, it's a nice slow uptrend to the high of the year at 109, right at the beginning, the first week of December. From there, it's a slow downtrend to where she is now, trading in the $97 area. In EOG, what do we got for EOG? 94, 94 and a half. This is way, 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 way in the money, because we're into 97. Okay, this thing has got to come down way down to here. Wait, where are we? 94 and a half. Way down to here. That's quite a ways down, which is quite a bit of support for that one. All right, so that's another one that looks good. Okay, TJX, we're not going to look at that. Oh, let's pull it up anyway because it's there. TJX. Nothing but sideways, looking garbage. Okay, she starts out the year at 78, going sideways, right into June. Spikes up to hit the high of the year, 83. Over the next 3-month period, she drops down to 71.62. And then that's right on election time. Then from there, she shoots up to 79, drops back down to 73, and now she's into the trading range of where she is now at 79. Ugh, I need this baby to drop down to 75 so I can get out of it. Who knows? Hold on to it for a while. All right, TOL. Let's take a look at TOL. TOL starts the year off at 29, goes sideways for about 9 months, shoots up to hit 33, trades sideways for a couple more months to the end of February, and from there she shoots up to where she is today in the $36 area. And TOL, we get to 35, 35 and a half, which we are well into the money for this one. So this is another one that hopefully don't have to spend too much time on this one tomorrow. Anything above 35 and a half is good. Okay, TOL, now VZ, which is Verizon. VZ is Verizon. Let's see what VZ is doing. How come that's not working? VZ, there we go. Okay, VZ is another sideways going stock. She starts out the year at 54. A couple of months, she drops down to 49, shoots up to make the high of the year 57, and then drop precipitously right around the election time. Makes the low of the year at 46. After the election, she goes from 46, and a month later, she's at 54. That's almost double, from 36 to 54. Not quite, but you know what I mean. She makes the high just after the election of 54, drops down to 48, goes sideways to where she is now, right at 49.06. Now, what are we looking at on Verizon on this one? The 48 and a half, 49. Wow. Okay, so we're in the money on this one by 6 cents. Okay, so you got the three kings, or what do you want to call them, the three stooges. You can go up, we make money. Stay the same, we make money. It can go down just a smidge, and we'll still make money. So we got 1 day left to trade on that one. Last one we're looking at is Yum Brands. Now, Yum Brands used to be a dividend king. They increased their dividend payments for 50 years in a row, and then all of a sudden, for some strange reason, they backtracked. They took one step back. They got knocked off the list. 50 years in a row they've been increasing their dividends. Why would they do that? Don't know. But I'm a little leery. Okay, Yum went sideways. She starts the year off 58, goes sideways for 3 months. Shoots up to another trading range of 64. Goes sideways for 6 or 7 months. Then right around the end of January, she shoots up to hit 68.80 or 68.95. No, 68.98 was the high of the year. Okay, and that was the second week of February. She drops back down to a trading range of 64, where she is now. And Yum, we are 63 and a half. So we're quite a bit ways in the money on the Yum brand. Okay, so everything looks good here. We only got two. One of them we're out of the money line. It looks like we'll end up either buying it or losing money on that deal. We'll have to take a better look at that trade tomorrow, right around 3:30 when we sign back in to give you an adjustment of where we're looking at. But as of this day, the moment, we are 36,664 for the year. So we're almost done with the first quarter. The first quarter return so far is 36% for the first quarter. Love it. We can actually hit triple digits this year if we continue going this. Now, I'm not gonna say you guys can do the same thing, because this takes years of practice. You guys have to know what you're doing. I'm gonna make the trades. If you're gonna copy my trades, fine, great, Danny, copy them. Okay, but there's no guarantee that you're gonna get in the same time as I do and get out the same time as I do. But I always make all my trades the day before. So I'm usually getting in at the opening price of the day. So if you put your order in, the opening price of the day most likely be very similar to what I get in. And if you're looking for your target price to get out again, great. Keep watching the videos. Subscribe to our membership. It's only $29 for a month, and get the tips and do the same trade. And sign in every Tuesday, Thursday, and Friday, and see what I'm doing. Ask questions. You got questions you want answers to? Send me an email. Say, hey, James, what do you think of, here we go, right here. What do you think of AET? I'll take a look at it. That's what I'm here for. I'm here to help you guys make more money. Let me check real quick, see if we have any questions. If not, I can be out of here early. That's wonderful. And no questions. That's great. So, in that case, I am out of here early, and you guys have a great day, and I will see you tomorrow